Good morning, and welcome to episode 77 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, June 15th, 2022. Today, I want to talk a little bit about market madness. The wild, volatile swings we're seeing in all markets over the past weeks is really kind of mind-numbing, mind-boggling. It could be due to anger over the actions, the aggressive actions the Fed's talking about taking. It could be just lunacy. It could be a little bit of both. But just to highlight the example, last week, Friday, we got higher than expected, yet again, not peak inflation numbers of 8.6% on the CPI. On Monday, we got 10.8% producer price index. I'll talk a little bit about that in a second. But the bottom line is on Friday, everybody saw that high inflation number. They said, oh my gosh, inflation has not peaked. It's continuing to rise. I need to go ahead and buy gold. Gold and silver both popped up on Friday, strong trading session. The weekend comes, weekend goes. Monday, no real new news to act on at this point, and the markets take the same piece of information, the inflation number being high, not peaking, and all of a sudden they say, oh my gosh, we've got a Federal Open Market Committee meeting this week. Fed was going to do 50 basis points. Everybody on earth assumed that's what they were going to do, and now they may go 75 basis points, they may go 100 basis points. So what happens? All of the equity markets sell off. I think the Dow is down over 900 points, NASDAQ down over 500. NASDAQ is close to dipping below 10K. The Dow is close to dipping below 30K. The dollar surges, bonds surge, and the gold and silver prices tank, drop down to low 1820s, low end of the range for gold, and low $21 range for silver. Today, we're back up again. It's hard to fathom what's going on. People are putting so much credibility in the Fed, and they deserve none. They created this mess. They misinterpreted and misdiagnosed this mess for over a year. Now they're finally coming around. They say they're sorry, they feel our pain, and they wish they could do something about inflation, and they will tackle it, and they are capable. And folks, they don't have the tools. They don't know what they're doing. If they do 100, they do 200 basis points on their Federal Open Market Committee rate hike. I tell you, it has no impact. We're still seeing negative real returns. There is zero opportunity cost to buying gold and silver right now. Want to go ahead and take a look at the prices. I didn't update them last week. We talked about something else, but from 2 weeks ago, this morning I've got gold at 1,827 an ounce. That's down 1.5% from 1,854.50 2 weeks ago. We've got silver down about the same, 1.6% to 21.55 an ounce from $21.89. Platinum is the only metal that's up this week. It's up about 0.5% from 2 weeks ago at $9.57, $4 from $9.53 then. And palladium is the big loser, down 8.25% from 2 weeks ago. It's at $1,920 an ounce from $20.93 2 weeks ago. As you can imagine, the gold-silver ratio, the number of ounces of silver it takes to buy an ounce of gold, virtually unchanged from 2 weeks ago. It's at 85.13 versus 85.06. And the dollar is surging. It's at 104.80. It's touched above 105 in the past couple weeks. It was 102.23 a couple weeks ago. So we have one of our very, very good clients, Bert. He was talking to Brian Zweig the other day, and he basically said, I'm waiting for the stock market to collapse, because when it does, I know gold is down. I think some of what we're seeing, and I think this is astute by Bert, one of the things we're seeing here is as the stock market sells off, people are stuck in a bad way in leveraged positions, and they have to raise cash very quickly. Every time you see the stock market fall like it did on Monday, you're going to see gold and silver initially fall to as people sell it off to get liquidity. So it's a smart move on Bert's part. I would suggest that better, rather than not knowing the future, knowing what we know now, the market has come down. You have a fantastic buying opportunity. I would submit it's better to go ahead and dollar cost average into the market, but I understand where Bert's coming from. As always, we want you to go ahead and subscribe and like us on YouTube and subscribe to all of our publications, Information Line Monthly, our newsletter, and Always Something Interesting alerts. Subscribe to our social media channels, and most importantly, whatever you do, don't ever forget that getting rich starts with keeping what's yours.